welcome. You are watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, Tuesday saw another range-bound trading session where the Nifty really traded in a 60-point range, and a largely lackluster session is what we witnessed. But beyond the benchmarks, the stock-specific action did continue to buzz on the street. Now, will the volatility increase today as we approach the monthly F&O expiry? We will find out all of it. But first up, the top headlines we're tracking for you this hour. Indian shares are likely to remain in a sideways to consolidating band on Wednesday as cues get weaker still from Wall Street and local traders refrain from buying fresh long positions ahead of monthly F&O expiry. Cash stocks will continue to remain buoyant as traders remain glued to sectors such as banking, PSUs, defense counters and railway stocks after last week's minor dip in prices. Extreme caution remains the need of the hour. Very good morning to all our viewers and good morning to you, Shail, as well. Well, we are at the penultimate day of the September series expiry. The Nifty still up about 440, 450 points up in this series. However, in the last two trading sessions of this week, we've seen the Nifty barely move about 10 points higher. So, Shail, how do you see the inability of the bulls to really witness a sustainable upside bounce?
Good morning, Sakshi, and it's a beautiful morning for all our viewers, especially in Delhi. The weather's changed for the better, and each day it improves, at least in the north part of India. I wish something we could do to shift this weather to Dalal Street as well, because a lot of disappointments coming in as far as the main indices are concerned. And Sakshi, it's completely global. We are at T-1 on the monthly expiry. Tomorrow, September's beautiful expiry ends, and you rightly said about 450 points higher as far as the Nifty is concerned. We started at a low of about 19,250, went all the way up to 20,220, and from that day it's been a fairly strong slide. We've lost something like 600 points on the Nifty so far. The problem is actually global, and today we are going to show you a lot of slides which actually point to a lot of weakness coming in as far as overseas cues are concerned. I'll request the PCR to fire the 10-year US Treasury yield. Sakshi, that it's highest since October 2007. Yeah. And October 2007 was a month in which we had the Lehman crisis. We had the Bear Stearns crisis. We had Freddie Mac and Freddie Mae. These were the two housing companies which collapsed in the US. This is not to say that that kind of a fall is coming in Wall Street, but as you will elaborate later, Dow Jones closed below its 200-day moving average yesterday. That's a very big signal that more pain is coming in. So a 15-year high for the US Treasury means that at 5.5% Treasury yield, nobody is interested in equities. You see the S&P 500 dividend yield is 4.7%, and that requires a lot of effort in research to pick out winners and make money in equity. If you are getting 5.5% without doing anything, then the entire money from all emerging markets is moving towards the US dollar. Now you have the US dollar index in front of you. This is at a 10-month high. We've seen this level in November of 2022, and these two pain points, and Sakshi, worse, crude oil is now above 92. That means that it's a combination of painful factors that are coming towards the Indian shores, and that will result in some kind of a sell-off on the Nifty and the Bank Nifty. As it is, you point out, it's a narrow trading range. So the market is waiting for some kind of a direction, and that will come from an FII sales number, which will, really hurt us. That's what I think is going to come in the next 2 or 3 days. So please watch out on the long side. And there is no way that if the Nifty and the Bank Nifty continue to contract, you will see the mid cap and the small cap and the other indices going up. There has to be some sanity in the market, and you will also see the possibility of a sharp slide in those prices as well. As it is, the Nifty's trading range is slipping lower, and now you see supports coming in at 19,300, 19,400, and the resistance is moving down 19,700. So it's going to be in a narrow range till at such point of time when a positive news comes in, so the index will move higher, or if a negative news comes in, it moves down. Sakshi.
Absolutely, Shail. But on the Nifty Bank also, Shail, despite the HDFC Bank counter contributing to the gains in the Nifty 50 for the second day in a row, the Nifty Bank Index has underperformed the benchmark indices again. So what will really move the needle on Nifty Bank?
So Sakshi, everything that we spoke about, 10-year treasury yields in the US, rising inflation, rising interest rates have a direct bearing on banks. And that's the reason why the Bank Nifty is, actually much worse off. I checked out all the 12 constituents of Bank Nifty in terms of charts, in terms of technicals. Frontline private sector banks are actually showing a lot of bearish trends in terms of build-up of short positions. Charts are not looking good except for Axis Bank. You talk about HDFC Bank moving, 2, 3, 4 point rupees higher. That's really nothing. We've seen such a pain point coming in for HDFC Bank. I think 1640 was the high fairly recently last week. The counter is at 1528, 1529. So not much is happening as far as HDFC Bank is concerned. And I would imagine the pain point on the Bank Nifty would be far sharper, because you see the rally from September 1st to September 18 was for about 2200 points, and that's come off substantially. So while it's up about 1% in September, I would imagine the pain will now whistle through the next expiry in October. So you see fresh support coming in at 44,000. That's substantially lower than what we are today, and upside is capped. So that's the problem in Nifty Bank. It's weaker still compared to the Nifty.
Absolutely. But on the FNO space, is the action going to continue on the stock specific space? Are you watching out for any stocks that we should keep on our radar today?
Sakshi, it takes me, I'd rather be fairly, safe here. I'm looking at Ambuja Cement. The counter is below 200 DMA, and the fact that we've seen the back of the monsoon, even the, the reversal that comes in September. So my understanding is that cement counters will do well now. And Ambuja, because it's under 200 DMA, it offers a nice potential upside at current levels. Of course, these are positional calls. So as far as Ambuja is concerned, the counter closed up 2 days in a row. Yesterday's gain was about 1.4%, and it's the short covering that's pulling up the stock. Now up 3.1%. As far as now, the open interest is down 3.1%, which basically means there is short covering happening and fairly strong delivery statistics as far as Ambuja is concerned. So cement, a tailwind of demand coming back into the system, and the fact that Ambuja has been beaten down quite substantially makes it a better positional play on the long side. Sakshi.
All right, so we will keep a tab on Ambuja Cement and the cement space at large when the markets hit pre-open and open as well. But let's also look at the global handover that we've got. Overnight, US markets on the Wall Street main indices, they actually dropped in yesterday's trading session. US consumer confidence fell to a 4-month low, and we also saw the home sales data turning out to be uninspiring that triggered the sell-off. And all three indices fell over 1%, with the Nasdaq slipping about 1.5% in trade, 1.5% also down for the S&P 500, and we also saw the Dow Jones down by 1.1%. Now, from the respective highs, the S&P 500 is down 7%. The Nasdaq has lost about 10% in trade as well. And remember, just like how Shail pointed out, The US 10-year yield is holding at 4.55%. The big question is, will it break this resistance? The dollar index is also now past 106.17, another monitorable that we will continue to track and get you expert views on that. Brent crude prices again inching higher over $94.05 a barrel, just about 0.8% of a surge is what we saw. Following these, the Asian stocks also slumped in the morning trade, and in fact, we did see Nikkei and the Kospi, falling about 0.4% each. It was the Hang Seng and the Shanghai that continued to trade in the positive zone. So it was a mixed opening, about 0.3% of a surge for Shanghai and Hang Seng up by about 0.7% in trade. When we talk about the Gift Nifty, mild positive is what it is indicating as a start for today. As far as the FII flows are concerned, the overseas investors have remained net sellers of the Indian equities for the 6th consecutive session. Now, FPIs offloaded stocks worth 693 odd crore rupees in yesterday's trading session, and domestic institutional investors remain net buyers. They mopped up about 715 crores odd. But the bigger question is, how much more will the sell-off continue from the FII side? They've already sold about 21,287 crore rupees for the month of September as well. Now, it's the right time to now introduce our guest to you. Gaurang Shah now joins in. He's the Senior VP, Geojit Financial Services. Very good morning to you, Gaurang. And thank you so much for taking the time out for this discussion. I want to first take your macro view. We've been talking about the rising treasury yields reaching back to those 2007 October levels that Shail pointed out at the same time when the Lehman crisis had happened. The Brent crude prices again, inching higher above $94 odd. We're also seeing the dollar index above 106, and the FII sell-off that doesn't, seem to be any abated anytime soon. Your thoughts on all of this, and what do you make of the impact that it could have on the Indian markets?
Thank you, Sakshi, and morning to all of you all. So let me just put the levels of Sensex and Nifty in the last 2 months, that is August and September. On the entire month of August, we spent consolidating between 19,200 and 19,300 on the lower side, 19,500 and 19,600 being the higher level. Eventually, we got a decisive breakout of 19,600, and then with great enthusiasm and speed, we made an all-time high of 20,200. On 1st of September itself, we were at 19,260. Either you or Shail can help me if my levels are right or wrong. From those levels, on 15th of September, we made a high of 20,200. So almost about 900 plus points rally we had. And from 18th of September till yesterday and this morning, we've seen a low of 19,625. So, over the last 2 months, 1 month we spent consolidating. The next month, we gave a breakout decisively on the higher side, and we made an all-time high. And then we kind of moved down almost about 600 odd points from the highs of 20,200 to the current levels. So in the last 1 month especially, Sakshi, we've been all over the place, and we've seen a very significant rally also. There are hurdles. We knew about all these issues, especially with the rising bond yields, rising interest rates, inflation issue in the Europe and rest of the world and the US. Crude oil prices and rupee dollar equation is a rude shock because of the output cut by OPEC plus led Saudi Arabia and Russia. But we have a small amount of comfort in terms of what we buy from Russia and Iran as far as natural gas and crude oil is concerned, and that too at a not dollar dominated trade, it's rupee dominated trade. Rest of the world where we buy crude oil and natural gas, we definitely have to pay in terms of dollars. So that's an issue. With respect to sell-off from the FIs that you were mentioning, I think during this period only, Sakshi, when FIs were selling, we made an all-time high. Correct me if I'm wrong, of 20,200. I mean, they've been selling over the last maybe about 2 or 3 weeks. So I'm not really worried about. And on the flip side, you've seen the domestic guys buying a little bit higher than what the FIs have sold. So, this FI selling is not something that I'll worry about. In the past also, I've not been worried about what FIs do. I mean, they buy India, they sell China. They buy Thailand and they sell China. I mean, that's the kind of work attitude that they have. So not really worried. But yes, what I am optimistic about is that we are at a very crucial level. 19,600, 19,500 was the level of resistance in the month of August. We've been closer to 19,600 and then we've given a pullback. Now, decisively, if we break 19,500 on the Nifty spot on closing basis, Sakshi, then I think I'll have to worry a little bit. But 19,500, 19,600 is something that will possibly hold out because it's been month-long consolidation at of a higher level. And Q2 earnings, which will unfold from possibly first, second week of October, should give us a direction. So we've gone a long way. I think we should consolidate for some time.
Right. Good morning, Gaurang. It's a pleasure to host you on
Thank you.
Market Today and BTTV. The only worry that I can see as far as the US Treasury yields are concerned is this, correlation of October 2007. I'm sure you were in the market then, so was I. And it was one of the most, terrible months, at least in my life, as far as professional equities are concerned. And the kind of carnage that we saw in that particular month was phenomenal. It reverberated across the globe. The only point I'm asking is, should the Nifty crack below 19,500, where do you see it?
Well, I was definitely there. And, a lot of people talk about how developed markets US and Europe are. And if I'm not mistaken, Lehman Brothers crisis happened in United States of America, right? The developed market, the so-called developed market. Our markets have never seen that kind of a situation, Shell. And yes, it was unfortunate. I mean, the way leverage was given, etc. Uh, well, they say there is a good old saying, Shell, that anything and everything that has to happen will happen to the stock markets, whether it is global driven or it is local driven. But you have, and we go with a caveat in the stock market that stock market is exposed to all kind of risk, either globally or locally. So we have to be prepared for this. I hope not. But if we do give a break below 19,500, then we straight away go to 19,200, 19,300. That's where we were in the month of August. The entire month of August, we spent consolidation. So that's the fear. But, given the kind of buying that is visible at lower level over the last 2 days at least, Shell, uh, I think you will definitely have support from DIIs coming in and buying at lower level. So let's hope that we don't break decisively 19,600, 19,500 on the Nifty spot and give a close below that. If we do that, then the next stop will be 19,200 and 19,300.
Okay.
Fair
Right.
point. Let's look at 19,200 in the worst case scenario as far as our friend Gorang is concerned, and let's hope it doesn't go below 200. The kind of carnage that we've seen in November of 2007, both in domestic and global equities, was not worth visiting. It's very bad for your health, especially your heart. So let's hope it doesn't happen. Gorang, your picks at this moment of time, where do you see value at current levels? What would you add for the long term?
Well, so two investment ideas again. One is one company was in the news because of the acquisition it did about a month and a half, two back. Aditya Birla Fashions Limited is the stock I'm talking about. Post that acquisition, market fell that it was a high price that the company had paid for that acquisition, and the stock slipped below 200. I think 180, 185 was the low it made at during that time, and then it has bounced back. Shell, the reason for identifying this stock is because we believe retail is going to be uh, one of the sectors that will always be on the radar, given the kind of brands and acquisition that Aditya Birla has made. We believe it's a great opportunity, and our understanding is that with the latest acquisition that they did, a large part of whatever they had to acquire, they have done. So now going forward from here on, we don't think there'll be any more acquisition unless and until you have something, some great powerful name with a sizable presence in the apparel segment, and if it is available at good valuation, then that may be the case. But Aditya Birla Fashion Limited is the first stock. It's not been a performer, Shell, but we believe In this kind of a market, if you are able to identify underperformers with a view of long-term time horizon and credibility in terms of fundamentals, then that may turn out to be a very good investment idea. So Aditya Birla Fashions Limited is the first one. BHEL. I remember discussing this, talking about this stock for a long period of time, Shell. And from the legacy of underperformance because of inability to execute the order book, earnings took a hit. But over the last 2 or 3 quarters, I think there has been a meaningful turnaround. And our understanding is that going forward from here on, both execution of order book and run rate in terms of earnings should improve. So BHEL, Bharat Heavy Electricals Limited, will be the second one.
Right. It's been a much discussed stock over the last 6 odd months as far as BHL is concerned. A very sharp rally from 65 to about 140. The stock pausing at about 125 now. And of course, a very, very strong pedigree in terms of order books. Gaurang, I have a quibble on Aditya Birla Fashion Retail. Of course, as you mentioned, the management is phenomenal and the corporate backing is excellent. My only point being that, everybody in the textile or the retail garment space has done phenomenally well. Look at Trent, record high 2200. Look at Raymond, record high of about 2200 again. Westlife, look at how quasi textile companies have performed, like Gokal Das Exports, record highs there. What is keeping back Aditya Birla Fashion Retail at a time when they have possibly the best possible brand bouquet with them?
So the issue, like I mentioned, Shell, was with in the last 1.5, 2 or 3 years, maybe 2 to 3 years, Shell. There were a lot of acquisition that Aditya Birla Fashion did, and because of that, there was a little bit of strain in terms of, or a little bit of pressure in terms of cash flows on the balance sheet. And whenever you acquire a particular brand, it takes time for that brand to start contributing to the balance sheet. And along with that, you have the company was continuously trying to acquire more and more uh, powerful and strong brands in the textile stroke fashion industry. That led to a little bit of overhang on the stock. But like I mentioned while I was giving you a view about why we have chosen ABFRL, is that period of huge acquisition and huge cash drain is now done away with. We believe cash will start looking on the balance sheet with the kind of brands that they acquire. Our sense is that the top line number would start looking much, much better. And equally so will be the contribution coming through the bottom line with the kind of acquisition that they've did. So we believe that the spree of acquisition that ABFRL had onboarded is now going to slow down, and business is going to start looking much strong.
Okay. Gaurang, also wanted to take your views on the favorite topic that I always ask you, the autos. And, yesterday also we saw Eicher Motors really ticking higher. Jeffries came out with a note, with higher prices right there. Maruti Suzuki, DAM Capital today has given a target of 12,400. Your thoughts ahead of the festive season? Which way would you tilt, two-wheelers, four-wheelers, and which would be your top pick?
Well, if I have to go for a nice long leisure ride, then it would be two-wheelers. And if I have to go with family on a very relaxed, comfortable tour, then four-wheeler. So I think we have, Sakshi, we have the entire bouquet of auto manufacturing companies in our fundamental research coverage universe. And right from, say, Bajaj Auto to the TVS to the Hero Motors to the Eicher Motors to Tata Motors, M&M, Maruti, Ashok Leyland. We cover all of them. And, I was of the opinion when this entire argument came out, when Hero, Harley, and Bajaj Triumph launches were there. I was always of a belief that hardcore Royal Enfield rider will remain loyal to Royal Enfield.
Yeah.
It is only the segment or the age bracket between 20 and 25 or 30 would want to go for, the Harleys and the Triumphs of the world. But beyond that, I think the comfort and the value for money, the maintenance, whatever be it, the pride of riding a Royal Enfield motorcycle will always be there. That's what has happened. So, I mean, and when that correction happened, it went to 3,000. Correct me if I'm wrong, Sakshi, when
Yes.
the was there. That was in fact, we came out with a buy report and we did speak about, buying Eicher Motors at those level because it was a very attractive level to buy from a long-term point of view. So I don't think there's going to be a huge dent, which the markets did fear when the launch happened of Triumph and the Harley. I think Royal Enfield will continue to be the undisputed king.
Okay, and I think Shail will second you on that. Just yesterday he was talking about, buying his 4th Royal Enfield, and I think Eicher Motors right there will separate men from the boys, isn't it, Shail?
Sakshi, let's hope I don't buy the 4th one. It's, you feel very, very happy in the first 1 month. And then what happens is, the heat is so much in Delhi that it just lies, standing in a corner, and you feel bad for the bike, you feel bad for yourself. And then after 5 years, you again think it's a bitch though. And 5 years, one day, you again want to buy it. So I have been in that loop for 3 times. I think I should buy a cycle and lose some weight. But Eicher, I am an invested party in terms of stock price, I think for 15, 17 years. And that's been a better bet. It's done fairly well, and I have no intentions of getting out of it. Gaurang mentioned that he'd come out with a buy report on Eicher. Just 2 days ago, Saurabh Mukherjee was with us, and it's a part of Marcellus long-term portfolio in terms of genuine all-time wealth creators and multi-baggers. So, buying a stock is better than buying a bike. That's what I feel. It's wisdom coming in at 52.
Absolutely. Okay. Let me just quickly take one view before pre-market hit open on Infosys and the entire IT pack. Morgan Stanley has given an overweight on Infosys, LTI, Mindtree, TCS, Emphasis today, higher targets right there. On IT, is it a good time to enter, Gaurang?
We were way, way overweight, Sakshi, even last year when entire world was underweight on IT. And surprisingly, after announcement of first quarter numbers this financial year, a lot of IT companies have announced big deals also. So we remain positive then, we remain positive now, and we will remain positive in future. And we believe, and we have almost about 8 or 10 names in the large cap, mid cap IT universe that we remain positive on. So Infosys, TCS, HCL Tech, LTI, Mindtree, Persistent System, Coforge, KPIT Tech, Tata LXI, Tech Mahindra. We like all of them.
Fair point. Sakshi, a bit of time let's spend on the pre-open. I wish this were to Nifty giving a quote of 85 points higher at about 19,750 on the pre-open. It's settling lower. 28 up now, 19,692. Let's look at stocks that are contributing to this particular theme. Paint stocks, Asian Paints down 0.84%, 32.65. Remember the uptick as far as the crude oil prices are concerned is impacting sentiment. There was heavy buildup of short positions on Berger Paints yesterday, and that's coming on the fore. What else is looking good on the charts as well as prices? Well, nothing much. Reliance now settling at 23.89. Of course, this number will change. Coal India, that's something interesting. Sakshi had pointed out the energy theme yesterday, ticking up 1.1% higher, 290. L&T Mindtree up 3% at 55.33. Let's look at other stocks. Let's look at what HDFC Bank is doing. Well, it's an uptick, 0.8% higher, 1550. Maybe a day for short covering. ITC 0.6% higher, 445. Reliance, now I must mention, 2% higher, 2389. The Nifty defying all odds as well as Gift Nifty, now up 53 at 19,715. Let's look at what's happening in the FNO beyond the index heavyweights. Let's look at the mid cap space. AB Capital 5% higher, 183.15. Gas Authority 2% higher, 123.90. ABRFL, something that Gaurang likes, 1.5% higher, 218. Remember, he pointed it out for the longer term. Manappuram Finance 1.2% higher, 142. The Nifty now settling 40 points higher at 19,705. That's where the game will be. Cyient up 4% in cash markets, 1740. KSP flat at 26.85 but in the green. So that's how the market has opened. We'll just keep on checking prices, and we are also waiting for Mr. Rahul Sharma from JM Financial to join us to look at how the technical part of the market is faring. A fairly decent opening, Gaurang, would you say?
Well, one point I forgot to mention, though you did ask, we were speaking about lower levels on the downside. But in terms of optimistic approach, Shell, 19,700, the spot Nifty level. If we give a close above these levels, then I think a march or a rally towards 19,800, 19,850 will come sooner rather than later. So I remain optimistic that we will eventually, though this is an expiry week, Shell, so choppiness, volatility. Tomorrow we have the FNO expiry, so choppiness, volatility will be there. But just in case, my hunch is that if we today, tomorrow, on Friday, if we do give a decisive close about 19,700 on the Nifty spot, then 19,800, 19,850 could come sooner rather than later. So, I mean, let's hope it is going to be choppy today also, like it was. Yesterday was quite frustrating, in fact, Shell. The entire day was, spent with a little bit of optimism then pessimism. But I mean, at these levels, with FONO expiry, you expect this kind of moves on the market. But let's hope by the time we end this week, we give a close about 19,700 on the Nifty spot.
Okay. Gaurang, I'll draw your attention to the FMCG space is what I wanted to ask your view on, Gaurang, because yesterday we saw Nestle ticking higher, we saw Britannia also moving up, and this is after a large, long, part of underperformance that's come in from the Nifty FMCG space. Do you think right ahead of the festive season, this space will also start to buzz, and one should take their positions now in one or two stocks?
Sakshi, you can, because the only issue is with the monsoon and of course the kind of contribution from semi-urban rural India with the volumes growth. But and I'm not too much of a short to medium term kind of a person, Sakshi. I always look at making decent amount of return on your investment from a long term point of view. And yes, yesterday your Colgate, Britannia, Nestle, I think Tata Consumer, all of them were in the spotlight. And this will continue, Sakshi. I'm quite optimistic about the growth prospect of all these companies. And in fact, we have almost about, here again, in the FMCG pack, we have almost about 8 or 10 companies in the coverage, starting with your HUL and the ITCs of the world, then going towards the Dabur and the Marico and the Imamis of the world. Our sense is that, even I was reading a report yesterday, Sakshi, that despite the, rainfall forecast being long-term below average, we are possibly going to close the monsoon season with just 5% deficit. That's what one of the reports said yesterday. And with 5% deficit, I don't think there's going to be a huge impact as far as contribution from semi-urban and rural India is concerned. And festive season, of course, like you mentioned, will look quite strong and healthy for FMCG pack. The only thing is I'll look out for discounts and ad or stroke promo spends, because that's one particular expense side vertical which FMCG companies have to be up to the mark, and that also leads to a little bit of drain in terms of profitability. So that will be something that I'll be watching out for.
Right. There is really no end to Gaurang's optimism. We'll just have to check what breakfast he had for this morning and maybe shift that to Delhi as well, with Sakshi and me having the same thing each day. Time to welcome our very dear friend Rahul Sharma, Associate Director, Head Technical Research at JM Financial Services, and he's welcomed with a red tick on the Nifty, down 27 at 19,637 in pre-open. What a pleasure to host you, Rahul, after so many days and so many months. Fire away. What is your view on the Nifty and the Bank Nifty?
Yeah, very good morning, dear Shailendra. So the point is, in spite of what we've had in the US breaking the 200-day moving average, Brent oil where it is, and the dollar index appreciating in the way it has, we only managed to come off like 500, 600 points from the top. So that goes to show the relative strength that the Nifty possesses with respect to the US markets. And this time around, we are expecting that the downside should remain limited. So technically speaking, 19,500 is a very strong support in terms of the psychological level, as well as the put writers being present over there on the derivative side. So my reading is today might be those days where the 19,600 that we sort of defended in the last two trading sessions gets broken intraday, and then market sees some kind of a revival from these lows. What is also happening parallelly is there is bullish divergence which is building up on the hourly charts of Nifty, on the hourly charts of Nifty.
Yes, please continue, Rahul.
Yeah, so we also have the bullish divergence continuing in the Nifty 500 index as well. So whenever such divergences have formed like a triple bottom, as of now we have formed two bottoms on the hourly charts. If the third one might happen today, so my sense is we should see the bottom being formed in today's session, and post that we are seeing a recovery happening in the broader markets, as well as specifically in the Nifty as well. So this dip should be a good buying opportunity. My sense is we should see a bounce back up to 20,100 in the next few trading sessions. Yes, it is the monthly expiry that we are heading into. At the same time, it is the FI positioning, which was primarily long for most part of September, has now gone into cautious zone since last two trading sessions. But a bounce back from here should see that get in the right place, and we should very well see both the banking index as well as Nifty see some bit of a revival from these lows that we may form today.
Okay, so Rahul, could you share with us two top stocks that you're watching out for, your top picks for the day?
Yeah, so as of now, for the banking bank, we are liking Federal Bank in particular. So this stock has shown extremely good resilience in spite of the correction, the big correction in Bank Nifty that we've had in the last few trading sessions. Now, the previous months over were very strong. The strong hands, the so-called strong hands, have held their positions into the same. My sense is we should very well see a fresh round of up move happening over here, especially close to the expiry. So momentum traders can sort of participate in this up move. We expecting 160 to be tested anytime soon. One can buy Federal Bank with a stop loss placed at 142 odd, and we feel that the relative strength that the stock has exhibited should now turn into momentum once Bank Nifty finds its feet.
Rahul, what is your view on HDFC Bank? All sorts of reports coming on the fundamental side. It's a great stock to buy, something to add to your portfolio. But technically, the charts are getting worse and worse. What is your understanding of where the bank is headed in terms of price and volume?
Yeah, so what is generally everybody's favorite is not something that makes money for everybody. It had become an overcrowded stock since many weeks now. But the point is the breakdown that we've seen in the last week below the 1550 mark. So below 1550, clearly bulls are on the backseat, and it is something which is also been a primary reason for Bank Nifty dragging its way down. What will be interesting to see is the kind of rollovers that the stock attracts. As of now, the stock is completely into bear grip, trading below its all long-term and short-term moving averages. If I were to put a target, I think 1450 is somewhere we can eventually expect the stock to. It may not happen in a straight line because we've seen a vertical down move in the last few trading sessions. So maybe a bounce back from these levels. It's more of a sell on rise stock unless and until 1600 is not navigated decisively. So my sense is below 1600, any bounce back that happens couldn't be looked upon as a shorting opportunity, and we may very well see the stock eventually slide down to 1450 on the downside.
Okay. 14, 15 is what it could come to. Okay. Got that. In the pre-opening space, I can see Cipla and Dr. Reddy's topping the charts, Shail. So let me just quickly get in Gaurang to understand the third defensive space. I've spoken to him about IT and FMCG. Is pharma also going to be the next space that one should watch out for?
So Sakshi, as a disclosure, we have coverage on both Cipla as well as Dr. Reddy's as a disclosure. And there are again a couple of stocks in the pharma universe that we cover. But if I have to narrow it down to maybe about 3 or 4 stocks, then 2 of them I've already mentioned, Cipla as well as Dr. Reddy's. The other 2 would be Divi's Laboratories and Sun Pharma. One thing with pharma is, Sakshi, that gone are the pandemic days, and gone are the days wherein you saw a superlative outperformance with the entire pharma pack. With the new normal set in, and of course, the fact being that India still remains the pharmacy to the world, there are going to be very stock specific performance that you will come through, especially with the APIs and the generics of the world. So if I have to give priority, these 4 names would be the priority. Other than that, of course, we have coverage on Aurobindo Pharma, Strides, Glenmark, etc. But would prefer focus on these 4 primarily.
Rahul, coming to you, one very, very quick comment on Axis Bank. We are just 1 minute away from market open.
Yeah, so Axis Bank has been
this is one stock that is at record highs in the private banking space.
Yes, so Axis
Right,
Bank,
sir, please go ahead,
is a relatively stronger of the private banking space, and I think the outperformance should continue. So my sense is in a bounce back, we should be looking at Axis Bank. There is a a small breakout that can take place above 1027 on the spot. So once that level gets crossed, we may very well see a good momentum shaping up in the same.
Fine. The market has opened. Nifty shows a downtick of 29 points at the beginning of trade, 19,636 for you. There is a triple-digit loss on the bank Nifty, 126 points, 44508. IT has opened lower, and in the border buckets, there is a minor red tick on the NSE 500 as well. Let's shift our focus to index heavyweights. What is HDFC Bank doing? Down 0.6%, 1528. This is the lowest level on HDFC Bank since November of 2022. Monthly low, weekly low, and a 10-week and a 10-month low on the charts. ICICI Bank is down 0.5%, 944.95. I want to see what Reliance is doing. Reliance is flat at 23.43. What is Infosys doing? Down 0.2%, 14.58. Nifty slipping further, 37 points, 42 points down, 19,621. The cut on the bank Nifty getting worse, 175 points lower, 44,466. What else is bad? SBI down 0.2%, 592. I want to see what Axis Bank is doing, down 0.4%, 1010. So it's almost a sea of red on the top 10 index heavyweight counters, except for L&T, which is up 0.2%, 2918. Let's shift focus immediately to F&O beyond the index heavyweights. Manappuram Finance 1.2% higher, 141.75. A swing trade in the works. Power Finance Corporation 237.35, 1.26% higher. India Cement 1% higher, 234.70. Remember, it's the swing trade in the cement stocks that's taking place mainly because of back demand coming in after the monsoon has shut. What's weak? Metal. Vedant down 3%. It's the top loser in F&O, 217.15. We have Hindalco down 0.7%, 468.05. We have Jindal Steel down 0.5%, 690. The Nifty now constant at 42, down 19,622. Let's shift focus immediately to NSE 500 and see what's ticking on the green side. Borosil new 5% higher, 431. There don't seem to be any new names that I can look at. Let's look at the most active counters. We have Vedant. So selling pressure on Vedant will now increase exponentially. At the moment, the third traded counter as far as volume is concerned, about 33 crore shares, 33 crore rupees worth of shares traded here. Cochin Shipyard is down 0.2% lower, 1086. Remember, this stock was up 10%, so flat trade so far. Let's look at gainers in the Nifty, which are beyond the index heavyweights. So it's going to be a pharma day on the long side and a weak day for metals on the short side. Dr. Reddy's top gainer 1% higher, 55.19. Cipla 11.75, 1% higher. Divi's Lab 37.72, 0.5% higher. So these are the stocks that are so far trading in the green. Let's just touch base with Rahul Sharma. Rahul, what would be your first step for the day as far as Nifty is concerned, and anything else that catches your fancy?
Yeah, so Nifty will wait and watch because 19,600 is where we had the low day before yesterday. It's best to see the first half an hour off before we take any trade in the Nifty. But what looks good at this point in time is Federal Bank. The stock has been showing extremely good relative strength. In fact, last three trading sessions, this has formed higher lows in spite of the Bank Nifty bleeding left, right, and center. So my sense is, one can buy Federal Bank for a target of 160, have a stop loss placed at 145 to begin with, and we feel that there is a imminent breakout that can be expected in this year.
Rahul, let me draw your attention to, one stock which is topping the charts as far as the F&O space is concerned, Aditya Birla Capital. The company made an investment of 750 crores in Aditya Birla Fashion on rice basis, and that's ticked higher for the stock. Your thoughts on this stock? What should one do?
Yeah, so in case you're holding the stock, ideally this bounce back should take us somewhere around 190 odd. The stock has spent some time around this 100-day moving average, and today finally there is an uptick that is seen at the opening hour, along with decent volumes, I would say. So my sense is 174 should act as a support, and a bounce back should see at least a 10-15 rupee jump from these levels. So purely a bounce back, not really like a big reversal, but from a bounce back perspective, one can look to hold on the long side.
Space, and then Sri Renuka Sugar in that. There's news flow again. The company has acquired 100% stake in Anamika Sugar Mills for 235 crores. The stock is up 1% in the opening trade, and the entire sugar space. Any particular pick from there too? Rahul.
Yeah, so at this point in time, I would just hang on for a bit. My sense is the way we've opened today. Really, the US markets had a tough trading session yesterday, and it's important to see what it can play out as a defensive. So as of now, it seems like the pharma is one space where we are seeing positive traction, at least to begin with. One stock that comes to my mind is Cipla. So Cipla has been has taken support around its 50-day moving average. There's a good possibility that we may see a bounce back up to 1220, 1225 on the upside. Even Lupin, as we speak, is hitting day highs. And so, my initial trades as of now, apart from Federal Bank, it would be in pharma, which looks like a defensive bet, especially given the way we have been being choppy in the last few trading sessions.
Gaurang, Shail, we couldn't hear you. Is there a Shail? Okay, fine. Shail, there was an audio issue, so now I can hear you. Okay.
Can you hear me?
Yes.
May I continue?
Yes, please.
Okay. I think it's going to be a pharma day today. The top gaining index is 1% higher, 15,121. What will be your top pick here as far as markets are concerned intraday, Rahul? How does Aurobindo Pharma look to you?
Yeah, so like you said, pharma is something which should play out well today, given the nervousness in the broader market, and Oro Pharma has been a relatively stronger play stock in the large cap pharma space, and we believe that there is an up move that can be expected, which can see the stock testing 900 on the upside. So my sense is one can have a stop loss at 845 and can see a good turnaround in the same. So to from the pharma pack, I think Oro is one stock which can be traded on the long side.
Okay. Gaurang, may
Right.
I have you in actually on the diagnostic space is what I wanted to take this discussion forward to. Like Rahul was mentioning, Divis Labs is one of his top picks right there. We've also seen a number of other stocks from this space really move up in the last few months. Laurus Labs coming to fore, Vijaya Diagnostics, the smaller ones as well moving. Your thoughts on this entire diagnostic space? Anything that strikes you at this point?
Well, so we used to cover Dr. Lal Path Lab, Pakshi, but after the stock reaching the target levels that we've had, I think we've given a sell or a book profit recommendation. So instead of diagnosis, I would rather look at healthcare service providers, hospitals. And over there, we have three companies that we are positive on. That is Apollo Hospital, Narayan Rudalaya, and Fortis Healthcare. These hospitals also have a dedicated department for doing the needful what otherwise the diagnostic sector does. So my view would be to look at hospitals, healthcare related rather than diagnostics.
Right. Sticking to Rahul, and Cochin Shipyard is coming on your screens, screaming at the moment at the day's high, 11:30, second day running. Rahul, what are the charts telling you?
Yeah, so yesterday the volumes were quite significant in the stock, especially after the correction that we've seen. So clearly, this shows that dips are getting bought into, and the rally in this space is not over yet. Now, clearly, the current setup is suggesting another round of breakout, which can take place at 11:30. More or less, I think that should take place today, considering the kind of volumes that we've seen in the first 10 minutes of trade. So my sense is the stock is reset for a target of around 1220, 1250 on the upside. Can initiate a buy at these levels. Have a stop loss placed at 1070 on the downside, and it is one of those counters which is defying gravity. And in spite of a broader market which is not doing so well, this is continuing to attract a volume expansion, especially at the lower level. So my sense is we should very well see the stock heading towards the 1200 and above mark. One can buy the stop loss of 1070.
Okay.
Sakshi, what's interesting in Cochin Shipyard is, you remember this was yesterday's superhero.
Yes.
It's the second most active traded counter on the NSE at 925. So 10 minutes of trade and about 205 crore rupees worth of Cochin Shipyard has been traded, 19,70,000 shares. And remember, this is a swing trade. We've seen the stock correct 4, 5, 6 days, and then yesterday up 10% and now up 2.6%. So as Rahul mentioned very clearly, this has demand coming in at lower levels, and that demand seems to be not abating. Very, very high traction coming into pharma, Sakshi. Look at probably Aurobindo Pharma, that's sticking at days high, 862.
Okay. Apart from this, let me also get in your view, Gaurang, on the mid-cap IT basket. Scient is sticking up higher, 4% up in trade right now. We've been discussing how Morgan Stanley's report has come in. You talked about the heavyweight ones where you already are positive, but in the mid-cap IT space, which would be your top pick?
So KPIT Tech, Tata LXI, Coforge, Science Limited happens to be in our coverage. And Sakshi, one thing is quite notable about mid-cap IT company, and that is on the earnings front. Uh, Mid-cap IT most of the times have delivered much better numbers than the large cap IT. And even when it comes to investing in mid-cap IT compared to large cap IT, then mid-cap IT companies have given better return than large cap IT. So I'm not saying that you should not look at large cap, but equally so, you should keep mid-cap IT companies also in mind.
Okay, got that. Rahul, is there any specific
Sakshi, let's focus.
Yes, please,
Let's
Shail.
focus our energies. Let's focus our energies on high beta, low ticket size item. And for Rahul, we present HUDCO, one of those stocks that had a very, very quiet life some 2-3 months ago. And suddenly, it's headed towards its all-time high. Of course, at 84 now, days high. What are the charts telling you after that stunning 20% rally 4 days ago, Rahul, on HUDCO?
Yeah, so some of these stocks have not given up in spite of we've seen kind of a round of profit booking in the mid and small cap category. So individual names are still continue to do well, and especially after what we saw on Friday, the kind of almost like 12 crores of traded quantity happened on that day. And post that, it has been sort of forming a bullish pole in a flag pattern, which is essentially a continuation pattern. And this seems like the bullishness is not done yet. So in terms of targets, I would say it is very well got the potential to head towards a 4-digit number eventually in the next coming few months. But in the very short term time frame, I think 90 is very much on the card. So for a target of 90, one can expect a follow-up round of up move in HUDCO. Maybe have a stop loss placed at 79.5, and there is a good risk reward that can be expected, especially from these levels. So the looking at the way the volumes have shaped up, there is a good possibility that this stock continues its upward momentum. Maybe the current pause is a good opportunity to re-enter.
Right. Rahul, let me draw your attention to REC now. It's 3.5% higher on the F&O space, one of the top buzzing stocks right there. There's news flow again. The two, along with Punjab National Bank, it has inked an agreement to co-finance projects in power infrastructure and logistics worth 55,000 crores. We've already seen a very sharp run-up in the previous month or so for both PFC and REC. For REC, this strong trigger, do you think this means an extended rally now on this stock?
Yes, so it's the way some of these power finance companies have done, it's a simple buy and ride for the upward momentum, and that is exactly what has happened even after this correction that we saw from 240 to 45 odds. And now I think the stock is preparing itself for a triple hundred, and considering the way the PSE index is, the current the recent pullback has only made it more stronger in terms of the technical strength. So my sense is in the very short term, one can expect 285 to 290 on the upside, but possibly 300 is very much on the cards where one can look to play on the long side. So have a stop loss placed at 265, around 10 rupees from these levels, or alternatively look to buy ATM call options for the October series, where one can look to participate in this upside. So a pretty strong counter, and especially after the current the recent correction, the strength of the setup has only become even better.
Right. Gaurang, I'd like you to also come in on this. 185% surge in the last 1 year. Very strong move on REC. Investors have definitely had their wealth getting doubled. Over the next course of 1 or 2 years, where do you see REC?
I would extend the time horizon to maybe a little bit more.
Okay.
View that India has, the government has already announced that there is going to be a sizable increase in the power generating capacities. And most of that new capacity that will come online, Sakshi, is going to be from clean and green energy, likes of solar and wind energy, including possibility of green hydrogen also being a part of that. And our view at Geojit Sakshi is that power generation, power transmission and distribution, and power equipments manufacturing companies are going to be in the spotlight for all the good reasons because of the extended capacity that will come into effect. That will means that for power generating capacities, it will be investment in adding on more clean and green capacities. For power transmission and distribution, that will be more business in terms of transmission of power from the place of generation to the end consumer. And for the power equipment companies, it will be more important because they'll have to make those equipments which will enable the entire process to happen. So we remain extremely, not only REC, I think Power Grid is the other one. Power Grid is more capable and suitable, Sakshi, because it has a command of the entire pan-India interstate uh, uh, grid distribution lines, which is extremely necessary for power being carried from one place to the other. So all these companies will play a very crucial and a focused role. And my sense is that after being an underperformer for a pretty long period of time, with the policy changes that the government has taken into place, I think all these three sectors are looking very attractive.
Interesting. We'll stick with the word R, Sakshi. And the next chart that the PCR will draw is Dr. Reddy's. At the moment, the top gainer in Nifty. Rahul, this is meant for you. How do you see the swing trade working in Dr. Reddy's? At the moment, the top gainer not only in the Nifty pack, it's also the top gainer in the Pharma pack. What are the charts telling you?
Actually, after the breakdown that we saw on Friday, it has seen a good bounce back from the breakdown, and my sense is this bounce back can take us very well to the 5700, 5750 mark. So clearly today, pharma being the favorite, is seen an across the board buying, and this should not be any different. But what looks even better in terms of a breakout is DV slab. So there is a horizontal in terms of the resistance, which is 3840 odd. So my sense is this stock is a relatively even stronger placed in terms of the technical setup, and we may very well see the stock heading towards the 4000 and above kind of a territory in the next few trading sessions. So one can look to buy DV slabs. A pretty solid breakout is there, and maybe have a stop loss placed at 3775, and we could very well see the stock heading into a kind of a blue sky territory once we cross the 3935 mark. So my sense is 4000 as a first target, and above that we could very well be even staring at 4200 in the coming few days.
Okay, got that. Gaurang, can I ask you on the finance names now? You know, Manappuram Finance is something that we've revisited a lot of times in the last week again. It's again ticking higher today. Apart from it, we're also looking at Canfin Homes, Home First Finance, IFL Finance, up in trade again. How are you looking at this entire small cap or broader market finance names? Is there something that investors should be taking an eye out?
I think they should, Sakshi, and our sense is that the loan book growth will not only be limited towards private and public sector banks, but it will be also quite good with respect to diversified finance companies, housing finance companies, and microfinance companies. In this universe, in the NBFC, if I have to club all these three verticals, then starting with Bajaj Finance, then going on to M&M Finance, L&T Finance, Chola, Sriram, uh, in the microfinance and housing finance, we like AU Small Finance, Ujjivan Small Finance, Equitas Small Finance. In the housing finance, we like Canfin Homes, LIC Housing Finance, Repco Home Finance. I guess you will see a decent growth in the loan disbursement, and that will possibly help the margins and profitability of banking as well as NBFCs.
Right. I think, Sakshi, the breakout trade for today is Federal Bank, and this was highlighted by Rahul very well. Let's draw this chart again, and this time get the attention of Gaurang Shah on Federal. Record highs here, Gaurang. What are the 2 or 3 things in the balance sheet of Federal that you like?
Well, so as a disclosure, we have a buy recommendation on Federal Bank, and I think over the last 3 quarters, if I'm not mistaken, the balance sheet has got healthier with respect to the gross and the net NPAs coming down, provisioning coming down. Historically, this was known as South India focused bank, but with the business strategy of branching out pan India, this has grown and augured very, very well for Federal Bank. Uh, I was listening to the commentary of the management post first quarter earnings, and even after that, there was some fundraising that was also taken up by Federal Bank, and during that time also, the commentary from the management was, and whenever remember one thing, Shell, whenever an NBFC or a bank tries to generate funds from the market, it gives you an indication how optimistic that bank or NBFC is in terms of their loan book growth and the margins enabling profitability. So we have been positive on Federal Bank right from I think sub 75 or 60 odd levels. And on earnings improvement, we have consistently upgraded our targets. I think 165 to 175 is the current target based on the earnings that we've seen so far. And if the earnings improve going forward, then the targets get revised upwards.
Let's get Rahul into this discussion. Fantastic call, Mr. Sharma, on Federal Bank. Remember, intraday high, days high, weekly, monthly, 52-week and all-time high stuck on Federal Bank right in front of you. And the momentum is so strong, Sakshi, that in terms of volume, I see consistent block deals happening here for 1,25,000 shares, 2,61,000 shares, 88,000 shares, and all of them, now punting higher on Federal Bank. Rahul, what's the medium-term outlook for Federal? Of course, Gaurang shared a target of about 175 fundamentally. What are the charts telling you?
Yeah, so this was our first call today, and my sense is we should very well see 160 being tested in the next few trading sessions. Clearly, the monthly expiry being there should play its part in terms of attracting the fresh longs into the same, especially in the October series. And secondly, the technical breakout has also taken place above the 150 mark. Strong volumes happening in whatever 30 minutes of trade that we've had so far. So looking at the way this is placed, I think, and in spite of Bank Nifty being negative 150 points, the stock has done extremely well in the first few minutes of trade. So my sense is 160, 165 very much on the cards. If you've taken the trade as per our recommendation, stay put into it. In fact, one can look to add more positions above the 150 mark. We've just crossed that level. If we spend another 15-20 minutes, I think there is a strong case for even another round of follow buying in the same. So initially we had started the call with a stop loss of 145. Now possibly the stop loss can be today's low, which is in the spot 147.4. So have a trading stop loss at 147.4 and continue riding on to the same.
Okay, so that's Federal Bank for you again, like Shail pointed out, and great call there, Rahul. A month, 6 month, year to date, and 1 year high for this stock, ticking higher over 2%. Let's also get in your view, Rahul, on the railway stocks that are coming back in flavor. RVNL up 1.3%. We're also looking at RITES now, looking at some gains coming in. Yesterday, again, we were looking at some of the other stocks, and day before again, IRCTC. IRFC, these kind of stocks were moving up. Any particular favorite on the charts, Rahul, for you as far as the railway stocks are concerned?
Yeah, I think it has to be RVNL. Clearly, the stock has almost completed its cooling off after the big move that we saw in early September. And now I think it's preparing for another round of up move, which can take us to 190, 195. So RVNL can be bought at these levels. Have a stop loss placed at 160, 160 to be precise, on the same. And I think there is a strong case for a follow-up round of buying in this. So we continue to remain positive on the railway stocks. The kind of volume that we've seen in early September has been pretty strong. And now after the consolidation cooling off, I think there should be a revival in the buying interest in the same.
Gaurang, your view on the railway pack?
So I'll give you a broader idea with respect to three sectors. Power generation, we already spoke, Sakshi. Similar is the view on railway-related stock and defense-related stocks. We all were discussing Cochin Shipyard. Well, that stock happens to be under our review. We had a buy call, but it is under review right now. But my sense is that all these three sectors for the next 3 to 5 years are going to be in absolute spotlight for all the good reasons, and a strong order book that will continue to flow from within the country as well as from across the borders. And these are with defense, with power, with railway. The positive thing is that for all the companies which are associated with these three sectors, whether it is government or whether it is private, the order book is going to look much, much stronger for the next couple of years. And that order book will help the growth of the company by virtue of execution of that order book. With railways also, with the kind of projects that are lined up by Indian Railway Ministry of Railways, with defense sector, you have huge positivity, and that will continue to uh, dominate the performance of these three sectors. So my sense is, don't look at that 5-10% profits. If you really want to have meaningful profit, then stay invested for a long term period in all these strong companies in these three sectors.
Fair point, and that's an advice that is repeated in most shows on Business Today television. Buy for the long term, buy quality, and buy the dip in stocks that correct substantially, as also have strong balance sheets. Rahul, this one is for you, and it's on Britannia. We've seen the stock sort of around its 200-day DMA all through last month and some part of August as well, but some kind of uptick building on the daily chart as far as Britannia is concerned. What is it telling you?
Yeah, so it's a pretty robust structure, I would say. The stock has attempted thrice to break the 200-day EMA, was not able to do so decisively. My sense is there is a strong case for a bounce back over here, which can take us to 4800, 4850 in the next few trading sessions. And we've seen at least in the FMCG space there is a bit of an attempt to pull back from heavily oversold territory. So good chance that we see a smart recovery in Britannia. So one can trade long into the same. Have a stop loss placed at 45.50 and go long in the same. So the setup looks quite promising to me.
Okay. On that note, many thanks, Rahul, and many thanks, Gaurang, for being with us on this special edition and sharing all the wonderful insights that you always do with all our viewers. It's always a pleasure to have you with us on Business Today TV, and look forward to our next interaction as well. Hope you have a fantastic day ahead. Let's now shift focus to our corporate radar section, and the company on our radar today is Prudent Corporate Advisory and the company's top management, Sanjay Shah. He's the CMD of Prudent Corporate Advisory. He joins us on this edition. Many thanks, Mr. Shah, for taking the time out. Very good morning to you. Sakshi this side, and with me is my colleague Shail Bhatnagar as well. About the company, of course, it's a retail wealth management services firm. Help us understand more about the current business and the outlook going forward from here. Of course, we have been discussing for an hour almost, 1.5 hours almost, about the markets, the way they are going strong at this point in time. And you deal in the same fashion as well with the retail investors' money, and you invest them in the markets. Help us understand, first of all, your own sense of the markets, and then we'll get down to the business. Your own sense. Where are the markets headed? Are they going to go strong? Are we going to beat all the blues which come to us from the global world?
Sorry, Sakshi, I think I was unable to get your message very properly. So I think Bhatnagar, can you answer the question again? I think the sound.
Can you hear me, sir? Am I audible, sir, to you?
No, still I think there's a lot of echo.
Okay, Shail, can you please try?
Yes, Mr. Shah, welcome to Market Today and Business Today Television. Am I audible to you, sir?
Yes, perfect.
Okay,
Perfect.
Okay, so Prudent Corporate Advisory is a recently listed stock and has done phenomenally well on the markets for two reasons. One, we are witnessing a lifetime of financialization of assets happening in India, which basically means the younger generation as well as existing savers are moving their money from time deposits, gold and real estate into mutual funds, into stocks, and one of the biggest beneficiaries has been Mr. Shah. Sir, how do you see the trend over the next 2 or 3 years when we talk about financialization of assets?
So I think probably I can tell you that India is on the cusp of significant financialization journey of the retail investors. And as you are aware that when it comes to the investment alternatives, I think there are a lot of alternative which has already vanished, like your cryptos, your Ponzi schemes, or these or that. So from our retail investors, I think mutual fund industry has created a significant headway by establishing SIP as a very strong vehicle of investment by the retail. And I believe that the retail participation in the mutual fund industry through SIP route has just begun. And we believe that this is a story which is structurally very strong long-term story. You might say some short-term hiccups might come, but overall, 3 years, 5 years, we believe that the retail investors participating in mutual fund is going to be a very, very strong things. If you look at from a global perspective, also today we are probably, if you look at the AUM to GDP ratio, India is hardly at about 16-17% of GDP, which is invested into a mutual fund. If you look at global standards, I think probably US is the biggest market where it is 142% of GDP, and global average is also about 70-72%. So I think we have a very strong probably participation which is yet to happen as far as retail investors are concerned.
Right. You have about 15,042,000 clients as far as the overall picture is concerned, and somewhere like 2 crore 34,000 live SIFs at the moment with the prudent corporate advisory. I'm so sorry, it's 20 lakh 34,000. Mr. Shah, where is the growth that you see coming in? How is your expansion in tier 2, tier 3 cities coming up from now till about 36 months from today? What will be the reach and the depth of prudent corporate advisory?
Today, if you look at from the point of reach, I can give you the number. Let's say, for example, probably we have almost 98% of India's PIN code covered as far as our investors are concerned. So we have people investing through Prudent on our platform almost from 98% of India's PIN code. As far as my physical presence is concerned, we have almost about 117 branches, which covers all the nook and corner of the country. However, expansion and reaching out to a tier 2 and tier 3 cities is something which is a regular exercise for us, and we believe that we'll continue to add wherever there is a need for us to expand. So probably we are at 117 today. We were about 105 branches before 1.5 years. So in last 1.5, 2 years, we had almost about 14, 15 branches. And I believe that adding at least about 7 and 10 branches in next 2, 3 years will continue to be a strong focus. However, I can tell you frankly, what is important would be to still cover the cities where we are already present. So I think there is a strong focus for us to become very, very deep as far as the areas where we are already there. So I think the story is very, very strong. Frankly, retail story is very, very strong, and we our business model is a very different model because we represent India's retail wealth management by way of aligning our interest with almost 28,000 India's mutual fund distributors. So if you look at, if country has about 125,000 mutual fund distributors, almost 27,000 are working with us. So we represent every fifth guy who is working for the mutual fund industry, and there we believe that a lot of people are now having comfort of working on the platform, and that story also looks very, very strong.
Okay. Mr. Shah, if you could hear me clearly, I wanted to understand a little bit more on your revenue mix currently. You have distribution side of the mutual fund business. You also started the insurance products business as well. Tell us, what is your revenue contribution from each of these major segments? Where do you see them growing to going forward from here? And how does it compare with the other asset management companies right there in the industry?
I think we are very, very strongly focused on the mutual fund because we believe that that is the space where retail can easily invest. So that was number one. And second, we believe that protection is something which is a very, very strongly required area. So when we diversified from a mutual fund, we look at insurance as a very strong business vertical for us. And within insurance, we strongly focus on health and the life. So these are the very strong areas, and specifically our focus on health is very, very strong. So if you look at the revenue mix as of last quarter, which is about April, May, June, 87% revenue comes from mutual fund distribution, roughly about 9% comes from insurance, and we also distribute the other product like your what you call the PMS, AIF, small cases, your liquid loans. So there are a lot of product which we also distribute, and we have a small stock broking piece. So these all put together gives us a revenue of about 8-9%. Going forward, if I tell you, say mutual fund itself is on a very strong growth pedestal, mainly because if you look at the AUM growth of prudent comes from two sources. One is the mark to market gain, which we believe that industry will be able to generate about 12, 13, 14% over a period of next 5 years, which is I think we all would be in the same opinion. And second comes by way of new money which we bring in. So if you look at as far as my new money is concerned, currently I have a SIP big of 600 crore, which is if you analyze it, it's almost about 7,200 crore comes by of SIP. And that 7,200 crore is almost about 10% of my current AUM. So I think 10 to 12% would we will bring by way of new money, and 10 to 12% should come by way of mark to market gain. So we have very strong feelers that in next 3 to 5 years, our AUM growth should continue to be in the range of about 20-22%. So that is very strong. So we are not looking at the market expansion, getting newer partners, or we becoming more deeper into the market where we are already there. So I'm just saying that organically we should grow at about 20-22% on the mutual fund itself. And insurance, I think it's an industry, it's a business which we started in last 3-4 years. We reached to 8-9%. So there we believe that insurance would probably be able to grow at a little bit better than the mutual fund industry, because we have a very lower base and we are trying to convert that into a business. So overall, we taken a target on the mutual fund side is concerned that we want to reach to a 1 lakh crore in next 2 years time frame, and we reach to a 1,000 crore of SIP book also in next 2 years. So we are at 70,000, close to 70,000 crore currently in the AUM side, and 600 crore on the SIP book. So 600 crore to 1,000 crore and 70,000 crore to a 1 lakh crore. That's the internal target we have taken.
Right. Mr. Shah, you are unable to hide your smile, and it's perfectly acceptable because of the kind of demand that you are seeing for your business, and that's the reason why the stock has doubled from its IPO price of about 630 rupees to about 1190 now. The other thing I wanted to understand from your side is, what is the percentage that Prudent Corporate Advisory makes from mutual funds as far as the SIP is concerned in terms of advisory cost? Because that is somewhere which SEBI is trying to reduce through its consultations with AMCs. What is that percentage that you enjoy at the moment?
So if you look at, let's say if you look at last year's earning, or let's say first quarter earning, what we earn by way of distributing the mutual fund product is roughly about 95 basis point from the total AUM which we manage. Now, if you look at the total AUM which we Prudent is managing today, our AUM is comprising of equity and debt, and 95% of money which we manage is from the equity. So within the equity, our earning is about 95 basis point, which I believe that I don't think it's something which is significantly higher cost for the retail investors to have some advisor. Because if you look at today, if I give you the numbers, as you already said, that 70,000 crore of AUM, 15-16 lakh customers. So average comes to about roughly about 4.5 lakh rupees, right? So that 4.5 lakh rupees kind of an average which you handle the people, then earning is roughly about 1%. And we are the distributors of distributors, in the sense that we have a conglomerate of 27,000 people who work with us. And if we earn 1%, roughly 67-68% we share with them. So my ground level IFA earn 60 to 70 basis point for the business which we does, and about 25 to 30% is retained by us, which we manage for the distribution business. So overall, we believe that we are at a juncture where the cost is not something which is significantly higher compared to our global standards. And yeah, but you are absolutely right. SEBI is reviewing the current TR structures, but we are of the view that the expected new TR structure is likely to come from regulator, may not be too disruptive for the industry.
Okay, right. Mr. Shah,
Okay. Let's.
Yes, sir.
Yes, actually, please carry on.
Mr. Shah, I wanted to ask you on your assets under management. Currently, they're around 55,000 crores. Tell me if I'm wrong. And where do you foresee the entire growth? Do you see it doubling? Do you have a vision for 1 lakh crore rupees target for your assets under management soon?
So, Sakshi, as I told you that we started the year at 56,000 crore and now we are close to 70,000 crore. So we already grew by 25% the current year thanks to strong market rally which has happened in the current year. So the mark to market gain has been very, very strong. So if I look at when I moved from 55,000 to 70,000 crore roughly, I think the new money which I brought in the current year is hardly about, let's say about 400, 500 crore per month. And that was our run rate. So last year our net sales was 5,000 crore. This year, our target of doing net sales was close to about 5,000 crore. We are on track as far as net sales is concerned, but mark to market gain has been very, very strong. So again, I'm just trying to reiterate that when I'm expecting that my AUM should move to a 1 lakh crore, I'm assuming that market will be in our favor, which will continue to deliver about 12% from here on, and we'll be able to bring at least 12 to 13% by of net sales. And that net sales is strongly supported by my 600 crore monthly SIP book.
So 600 crores is coming in to prudent advisory via SIPs, which are actually invested in top 7 or 8 AMCs. Mr. Shah, I was looking at the revenue mix where a lot of money, a large percentage of the revenue comes from top 5 or 6 AMCs where this I'm sure 600 crore monthly SIP is deployed. Is there an element of risk in this revenue stream provided one or two AMCs decided to move away from you?
I think this, because probably you can understand that it's very difficult for them to move away. When you are saying they have to move away from me, means they have to say that I don't want to work with Prudent as a distributor, and we represent very strong retail. Today, if you look at Prudent is a very important piece in the asset management business because we are not like the large wealth outfit. We bring the business from almost about 15 lakh customers, 27,000 distributors from 115 cities. We also bring a lot of business. My entire business comes through a technology platform called Funds Bazaar. So if you look at the kind of business which we bring for the asset management companies, it is very, very retail centric and it's a very pure long only business which we bring. So I don't see any reason for somebody to move away from us. That is number one. Number two is, say the distributors are required by everybody. Right? So I think it's something which is very difficult for me to give an answer because it's very unlikely. And when you say that my business maximum business comes from top 7 AMC, that's the industry standard also. Because today, if you look at top 7 AMCs contribute 65% of the AUM, and I'm also in line with that number. So my AUM is also similarly represented because I represent very, very retail, right? So when you are representing retail of the industry, you are normally going to be aligned with the industry numbers, except one or two AMC where my number might vary by about 2-3%, not significantly, but.
Okay. Sir, could you also help us understand what is the EBIT margin outlook for you and any particular risks to the margin that you have currently?
So there are two elements as far as when I'm talking about the EBITDA margin because we believe that we are also into a very strong operating leverage story because almost all the fixed and variable cost has been taken care of by me, care of by the organization. It's a business where we generate significant cash. It doesn't require any kind of working capital. And last year we generated 125 crore of cash, and I'm assuming that I'm on the trajectory of growing at 20-25%, which is we believe that we should be able to continue to generate the cash. Now coming to the EBITDA, if I am growing my top line at 20%, if my expenditure are not growing at the same rate, because I'm assuming my expenditure should grow at about say 2-3% more than the inflation. So inflation expected to be about 7-8%. So my operating expense should grow in the range of 12-13%. EBITDA margin, the top line should grow at about 20-25%. So overall, I assume that in next 3 to 5 years, my profitability margin and the EBITDA should improve. Now, only risk which you rightly asked about is the regulatory change, right? Because today we earn about 95 basis point. Now, if some changes comes and if that margin comes down by about, let's say, 2, 3, 4 basis point, then entire book would be repriced. So I think that is the only risk which we have today. And second would be, as you are aware about, we are into a cyclical business. We never knew what will happen to the market. If market falls by 30-40%, if operating leverage is positive for me, if AUM falls, it is also negative for me. So to give you the answer, regulatory risk, market risk, apart from these two, I think it's a very strong operating story and we'll be able to maintain the margins.
Mr. Shah, how much of your revenue comes from mutual fund advisory? You've always, you've already started to move, add revenue streams into your business through selling and reselling of insurance. At the moment, what is the revenue coming from mutual funds in terms of advisory, the percentage?
Sir, I think we are pure mutual fund distributors where the our earning comes from the AMC as a distributor, and we do have the RIA license, and we intended to work as a investment advisor also. But however, I think it's so today our RIA activity is absolutely not started by us. So the advisory business fee is very zero. The reason being that the regulatory requirement says that once you work with somebody as a distributor, you cannot provide the advice to the same customer. You're required to have the very strong segregation as far as advisory and the distribution is concerned from the client. Now, the biggest issue as far as working as an advisor is concerned is the collection of fees from these almost 15 lakh customers. Sir. So, if you let's just work with somebody with a 1% advisory fee, it's very difficult for you to do a collection from those as a fees is concerned. So, you do not have a strong mechanism for fee collection. That's the reason we strongly remain on the distribution side. So advisory fee is absolutely zero.
Okay. Sir, could you also help us understand your own growth targets when it comes to profitability? A 45% surge to 28 crores is what we've already seen. Do you see a sustainable growth rate at 45% or so for the entire fiscal year 2024? What could be, the target that one could see?
So I think the my numbers are visible. I has already told you that my AUM has grown by about 25% from the starting of the year, and that will definitely translate into a growth on my top line. And operating expenditure is not growing at a healthy, it's not growing at the same pace. So overall, we never give the forward guidance, but I believe that we should do much better in the current year. Also on the mutual fund side, on the insurance side, I think it's going to be a consolidation year because as you all are aware that we have a very strong book on the life insurance side, and last year was a significantly better year on the life insurance, mainly because of the regulatory changes which came in the last year, specifically the taxation side. And I think the current year is little bit subdued on the LI business side. So probably insurance may not do that great like what we did last year, but overall mutual fund should continue to do much better.
Right. Mr. Shah, what is your
yes.
Mr. Shah, Sakshi, will you just take the questions, please?
On especially the retail participation in the last 4 months, the way it has grown, do you think it is sustainable going forward as well? And is that a factor that you consider when you, at least look at your own internal targets of growth?
So yeah, because this is a business where some kind of cyclicality which might come in, and which I think you all will agree that it's something which cannot be forecasted, right? You never know what will happen to a market, how the sentiment will turn. However, if you look at the current year, April, May, June, and July, first 4 months were very bad because if we used to do a 500 crore of net sales in last 2 years, I think April, May, June, July, my net sales was only about 250 crore. So the retail participation when market started railing, I think they were basically against the market. When market was going up significantly, they were redeeming the money in the April, May, June, July. However, last 2 months has been reasonably good. I think we are now doing a net sales of about 500 crores. So again, we have seen stability has came, but there is not a euphoria kind of a situation when it comes to a retail. Retail is just consistently participating through a SIP. So there are 2 points. When I look at the growth, I believe the normally SIP discontinuation is very slow, and hence as I have a 600 crore of SIP book, it is going to protect me significantly on my overall collection is concerned. Hence, I believe if market is not significantly, it doesn't have a huge turbulence, I should be able to achieve my target in a easier way.
Many thanks, Mr. Shah, for speaking to us. And, of course, commendable, performance for you, both on the top line, the bottom line, as well as what we have seen in the terms of growth that you're already saying, the numbers that are speaking for themselves. And we hope this performance can really continue for you going forward. Here's hoping that we can have you back on the show to discuss more about the business outlook very soon. Many thanks for being with us. Let's get back to the market. They're slipping away. Now almost a 100-point dip on the Nifty. 19,570 is the level at which the Nifty is trading at. We're seeing a 350 point of a dip for the Sensex, 65,600 and thereabouts. And you're seeing the market, breadth also weakening a bit, with most of the sectors now slipping away, especially the heavyweight Nifty Bank, that's down in trade. You can see the private banks, financial services, especially now almost 1% down for the financial services pack. So that's where the pressure is emerging from. We're also seeing the Nifty IT now down by 0.4% odd. PSU banks have slipped again. Autos, FMCG, metals, they're all dragging the markets right now. The only bright spots remaining, healthcare and realty at this point, and slight gains coming in on the broader markets front. It remains a pharma day. Divis Laboratories, Cipla, Dr. Reddy's, the top gainers. Apart from it, Sun Pharma also ticking higher in trade. The saving grace, which is stemming the losses, is Reliance Industries, that's still up about 0.2% in trade. Shail, anything else that you'd like to say?
Sakshi, the point I was trying to make, that the Nifty is waiting for some kind of a move, and that move is coming on the downside. We've already broken the third support level on the Nifty, which is now at 19,569, 94 points lower. It's the day's low. And I believe, what Gaurang was saying, that maybe 19,200 should be what we should be mentally ready for. Strong sales coming into HDFC Bank. All the index heavyweights are at their day's low. Kotak Bank, ICICI Bank. So we had talked about the weakness creeping into into Nifty Bank, because the structures for the private sector space were in the banking completely weakening, and there was a lot of bearish positions in the ITM calls. So that's reflecting, and it's T-1. Maybe it's the expiry moves that are coming in for today, and then tomorrow the market will be flat again, but definitely weakness creeping in, and it's the first hour of trade that is about to get over. 363 points already down on Bank Nifty, 44,260. Sakshi.
Absolutely. Okay, then we will just quickly wrap up this special edition. We'll continue to monitor the market move for you throughout the course of the day. Many thanks, viewers, for being with us. Many thanks, Shail, for joining in on this special edition as well. Meanwhile, you should stay tuned onto Business Today TV to catch all the news from the world of business and stock markets, and also continue to engage with us on our social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in for now.
It's a little piece of India in Canada. Indian origin families marking Ganesh Chaturthi in Brampton. Kids born in Canada with parents who moved to the North American country tens of years ago. However, this year's celebration is underlaid with a tinge of anxiety over what lies in store for them as India and Canada slug it out in the diplomatic arena.
I have gotten a call from my friends कि उनके जो बच्चे हैं वो यहाँ पढ़ने आए हैं और वो पूछ रहे हैं परिस्थिति कैसी है। मैंने उन्हें बताया कि भाई ग्राउंड लेवल पे परिस्थिति काफ़ी सेफ है, आप डरिए मत, बट अभी उनमें एक खौफ बैठ गया है।
Canada is among the top 7 nations with an Indian origin population. While US tops the list with nearly 44.5 lakh Indians, UAE and Malaysia follow far behind. Saudi Arabia, Myanmar and UK are the other countries with a sizable Indian population. Canada had an Indian population of nearly 17 lakh in 2021. There's a general perception among the Indian origin population that the Modi government's tough stance is long overdue.
इंडिया ने जो इनिशिएटिव किया है कि ये जो एक्टिविटी इधर बढ़ रही है उसको कंट्रोल तो लाना ही पड़ेगा। और ये
क्या आपको लग रहा है कुछ खालिस्तानी एक्टिविटी बढ़ रही है और उससे आप लोगों की पर कुछ असर पड़ सकता है?
फॉर श्योर, सपोज if he is not controlled by the Canadian government, never know we are not safe here then.
People like Gurpatwant Vannu are raising slogans like this. Should the people coming from India not be worried?